VCs were considered, we call them vultures. They're going to come and take charge of your company and control the company, bring the new management in, and we were like very scared. What if that concept doesn't work? And again, that's kind of why we decided we need to be entrepreneur focused. When we invest in our company, we want to be sympathetic to what the entrepreneurs are going through and really support them to succeed.
Okay, guys, welcome to the BloomX podcast. Today we have a great shout out to mention. Shout out to MCRO for becoming a continuing sponsor for the podcast. So this episode and future episodes is going to be brought to you by MCRO, who enables businesses to grow through handcrafted digital solutions of the future. MCRO is a web and mobile app development studio with a competent, dedicated, and experienced team focused on solving business challenges through fast to market and producing high-performance digital products. If you're looking to turn your destructive ideas into reality or have a reliable strategic tech partner to explore options with for your existing work or for new work, reach out to us and we'll make the introduction for MCRO, and you can have the conversation over a coffee or a Bone Shaker IPA, your choice.
This is a podcast I've definitely wanted to do for a while, right? I've ran into you in so many events and never realized you're in VC, right? Until like the last 2 years, really, good news came up on the radar as a beginner stage investment tool for companies to get funding. And the companies you have funded so far are very interesting companies. And I think today's episode is going to be really interesting because not a lot of people get an opportunity into how a fund can start. And as a managing partner of this fund who started this thing, I really want to get some insights into that, right? So let's talk about that, right? So prior to even launching the fund, Mohan, what kind of things were you doing?
Yeah, so I would say we call it, I think it was more of an evolution, how we end up starting our fund. My partner Marat and I, independently, we are engineers turned entrepreneurs, and then after exiting our businesses, we ended up doing angel investing through an angel group called Yoke Angel Investors. And then realized, hey, we're doing this full time, we enjoy it, why not launch a fund, which we did about 2.5 years ago. We really love it. Just to take a step back, me personally, I actually went to University of Toronto, did mechanical engineering.
Awesome.
Graduated in 93. When we graduated, there was no jobs in automotive at all. It was a pretty tough time. So I ended up switching to software development and worked for a company in the US, then worked in Europe for a year, came back, worked at Rogers. And my partners, one worked at Bell, another one worked at Telecom, another one at Notal. We were actually developing applications on a Unix platform for IVR, voice recognition technology,
Wow,
in the contact center space. So it is a very complex programming concepts on Unix platform. It took extensive effort. We're like, hey, why don't we build something on a PC, on Windows NT? Believe it or not,
wow.
Windows NT.
Okay,
yes.
okay.
So I guess we went, started our business in our basement for engineers, no sales knowledge. And we said, okay, Windows NT, we're going to have to restart every day. So we ended up putting 3 of those platforms. It ended up being cheaper than buying a expensive Unix platform. So we actually, I guess around late 90s, we actually put our website. When you search on Excite or Yahoo, if you know about those search engines before Google came up, we were ranked number 1. So we were getting leads all over the world. So our first install was in Ukraine, second was in Venezuela. They're like, hey, this IVR platform, okay, there's Notal, which is a Canadian telecom company, tend to be extremely expensive. There's another company called Pulse that was fairly affordable. So we were fortunate. We were doing at the right place at the right time. Long story short, we were in 40 different countries and then got acquired by Enchows in 2009. And then ended up trying to do my angel investing 1.0. Didn't work out well. Then went back to doing few startups and had one startup in an automotive software and another one in telecom space again. Not the same, but kind of similar. Second one also got acquired as well. Then wanted to join a group where instead of writing a big check, how can I write small checks in the multiple companies and really work with others who are investing? So it's this way you actually learn from others how they invest, and you kind of diversify yourself and mitigate your risk that way. That's how I came across Yoke Angel Investors. It's a not-for-profit group based in Markham. It's about probably 100, 120 members, accredited high net worth individuals. That was a really good experience. Got to meet so many successful entrepreneurs, successful corporate execs looking to invest in early stage companies. Through that, I invested in 10 companies. One of them is Enthusiast Gaming that went IPO. Another one is actually what we are very proud of is actually UFT grads launching a satellite called Kepler Communications. I don't know if you heard of Kepler. So what they're doing is they're launching microsatellites at a lower orbit. Big, bold idea. We love the founders, and they just had an idea. We invested. We even went invested during the VC round as well. They've launched 2 satellites, and their big vision is to build constellation of satellite.
Wow.
So I think I'm very bullish on what they will do in the near future. Actually, when it comes to especially for IoT applications that requires connectivity and so forth. So I guess we were doing this angel investing. We love it. I love working with entrepreneurs, being an entrepreneur, always trying to look for passionate entrepreneurs that can persevere. And my partner, Marat, again, oil and gas engineer, different entrepreneurial experience, had invested in 20 companies. He actually met Vitalik at Ethereum before they launched ICO. Always trying to look for great entrepreneurs with a big vision, taking big, bold step. So he had quite a bit of success exiting successfully as well in some of those investments. We're like, hey, we're doing this for fun. Why don't we launch a fund? And so it's very unique. We are operators. We haven't come from the financial background from a base REIT experience standpoint. But then we met our third partner, Mona, who had actually had worked for an investment banker in Hong Kong, worked with a small VC in the Valley, and she brought in our back office support. So to date, long story short, we've invested in 23 companies. 18 of them are in Toronto, Kitchener-Waterloo area, us being very local. We made our first, the last 5 have been outside of Ontario, I would say. We made an investment in State 22 out of Montreal. Made an investment in Kubo, based in Victoria in British Columbia. We made our first investment in East Coast, Rally now in legal tech, which we are very bullish on as well. So we've now trying to expand, just being a Toronto-based VC. We're getting access to a number of deal flows across Canada as well, which I think is very critical for what we want to be, especially the seed stage investment.
That's amazing. Like that's the kind of a career path you want, right? When you can see all these innovators and innovations and new things coming up, and not just be on the outside looking in, but being able to be a part of all that. And I think that's what you have really leveraged within yourself, is by being able to support entrepreneurs, being enabled in all these different projects.
Yeah.
Being an engineer at the heart of yourself, right? Like
it's more than anything, we learned a lot meeting these entrepreneurs, young entrepreneurs coming in with concepts and business models and even technology. So for me, I think we had our experience as entrepreneurs going through the tough time and really coming out of it, and it's never over. The challenges that you face is continuous. You can never say, okay, I'm done with this challenge and that's it, right? So we've actually That's one thing to able to share that information with the entrepreneurs. But I think learning from these entrepreneurs is even a next big lesson for us as well. And I think what we do as a fund is not just writing a check. One thing that we've done is our LPs, who are investors in our fund, also previous entrepreneurs or execs. We leverage them to help these entrepreneurs at an early stage. So pre-seed, seed stage is where we invest in, and is probably got the highest failure rates. And what we're trying to do is how do we increase the chances of these companies succeed at a very earlier stage? And I think, so I mean, just to talk about, yeah, it's very exciting working with entrepreneurs, the knowledge we gain and the knowledge and expertise that we can give to them. I think, and seeing them grow, incorporate some of these information, and you see them do well. It's actually more than the financial benefit. I think it's very rewarding to see that as well. So, but I think as a fund, the financial benefit is very important. But I think when we do the little things and think about from a long-term perspective, I think it's great. I think the financial results will come ultimately.
Absolutely. So, I mean, you give a lot to digest here, right? Like the things you've gone through, things you have got to this point. It seems like there's like a lot we can learn from here to go through, right? So let's talk about the companies you first developed, right? When you as an entrepreneur, can you talk a little bit more about what the company was?
Yeah, it's called Pulse. Pulse is it's funny enough, we are 4 founders, and all our companies that we started were called Pulse.
Okay.
Pulse Voice and Pulse Services and Pulse Networks. Pulse Networks in the carrier solutions we work with tier 3 telephone carriers as well.
Okay.
Yeah, so Pulse was a company. So we organically grew. We didn't get any investment. It was, it's, and to be quite honest, we've been profitable from day one.
Nice.
So what we did was we ended up getting some professional services to fund product companies. To be quite honest, we missed the boom and the bust of 2001. And I think even 2008, we missed it as well. And our best year was in 2009 when we got acquired by Enchas. And that's the beauty about being a smaller company. And we were very limited in terms of resources we can get access to. We were heads down, building our business. So our first company, we grew it almost to $10 million in revenue, and being profitable is always challenging.
Yeah.
There was a time we thought about, okay, you know what? Let's go and raise some money. We went out at that time. This is again late '90s, and VCs were considered, we call them vultures. They're going to come and take charge of your company and control the company, bring the new management in, and we were like very scared. What if that concept doesn't work? And again, that's kind of why we decided we need to be entrepreneur focused. When we invest in our company, we want to be sympathetic to what the entrepreneurs are going through and really support them to succeed. So going back to your question, yeah, so we were organically grew our company. I mean, maybe there's the pluses and minuses. Maybe we would have raised significant capital, and we would have built our company to be $100 million. But at the same time, we were very conservative engineers. We thought, okay, let's just build the business. And I think I would say we were lucky as well. We were at the right place at the right time at every stage of our business. But I must say though, perseverance was very critical. And we are passionate about it. I think we go through so many tough decisions that we have to make. We were selling solutions, and if you don't bring any sales in, we were down significant hundreds of thousands of dollars on a monthly basis. There are times that we will have to remortgage house to sustain that as well. But we believed in where we were headed, and having 4 founders working together for that long was very important. We all have different perspective. We helped each other, complementing different skill sets that we bring to the company. But we all had one vision, one goal. okay, we want to get there. And I think, we didn't have the luxury of capital, right? We all of us were immigrant. We came here with mortgages that we need to support our parents with. So we didn't have the luxury of, hey, our parents will support us. It's more like we need to get some income so we can support the parents. So because of that, we were extremely cautious on how we grew it. But I think we were fortunate. And I will say we also, even at early 2000, for us to be internationally, like to expand internationally, we had an office in India, we had an office in the UK as well.
Yeah.
We leveraged a lot of the government program at that time, export development in Canada. They had different trade missions that we participated, and they turned out to be helpful for us. But as you can imagine, 1996 is when we started the company. There were no incubators or accelerators that existed. We couldn't even Google up strategies.
Yeah.
So I remember my partner and I would go to a bookstore and we would read up on sales and then come back and implement that. So that's kind of, we wish we had that kind of a support that entrepreneurs currently have, which is good. But I think at this point in time, it's amazing to be an entrepreneur. I think we were talking earlier on about so many changes that are happening in the industry or globally as well. Apart from that, in Toronto, I think the whole ecosystem around startup and entrepreneurship, it's significantly growing. I think if I were an entrepreneur, I would love to be at this during this stage to build. There's enough support out there to build a really successful global billion-dollar company, not just to a 10, 20, $50 million company, right?
No, absolutely. And I think that's what the crutch is here, right? Like it's easier now than ever. I'm sorry, not easier. There's more resources now than ever for entrepreneurship, right? But in a way, like everyone's kind of forced into it, right? Where like that's where all the growth really is right now. Everything else is kind of stagnant, right? Where right now everyone's starting a company almost because like, why not? I have the resources available. There's resources being given to us, right? But it's kind of like a gold rush feeling. It's like everyone's kind of rushing towards it. What you feel like? Do you think there's any kind of point where like we should look back and reflect and think like, are these companies really solving real problems, or is it being gone? Are they going after it just for the sake of like it being a problem they can apply a technology solution for?
Yeah.
Like, where's really the guiding stone of being like, is this like, okay, this is a cool idea, a cool concept? Is it really come from you as like a gut feeling from the past experience that you had, or do you guys like apply some kind of formula to determine what's a cool company, what's not?
You mean as an investor, you mean?
Either or, like whichever way, as an investor or a personal someone who validates an idea.
Yeah, so I think that you said it right. I think you need to solve a problem, right? If you're getting in there, oh, it's cool to have a startup and there's all this funding and let me start a business because of the funding, then that's probably a wrong way to start with, right? I think there is the as an entrepreneur, you need to be passionate about what you're trying to solve. So you probably have experience, and we love the founder market fit or founder product fit. So if you are being in the travel industry, that's being solving a problem, and then you're trying to build something like I want to do something in the restaurant business. So I don't know if that's the right thing. Maybe some people have been successful in doing so. We always say you've actually worked in the industry, you've found a problem, and you're very passionate about what you want to build. I think those are very critical as well. So we look for entrepreneurs that are passionate and possibly perseverance. And perseverance how do you check if you're perseverant? It's based on look at how the entrepreneurs have been over the historically, as well as we tend to meet entrepreneurs and track and follow them for a long period of time. So you can see them how they've gone through the really difficult time and come out of it, or how they've not given up in certain areas and how they've been very innovative in those certain areas as well. So I think it's very important. Like, you got to be passionate. You're solving a problem, and otherwise you get caught up on this. And I always say, I think, like, we never, as an entrepreneur, I personally never raised funds We grew it organically. But I think there is a value in how the funds can help accelerate the growth to be a fairly large organization, right? But I think they need to first, you can't, we get entrepreneurs come and say, hey, I need funding to build the product. No, you gotta, like, that could be friends and families that are able to support you along the way. Build the product, get some traction, and kind of have a plan. Now, with getting an X amount of investments, I can grow to this certain levels that's needed, right?
Yeah.
And then take it from there. So I think, I don't know if that's kind of what you're asking.
Yeah,
but,
no, absolutely. Like, I mean, this is one of the interesting things you realize too, right? Like, I mean, the media kind of glorifies these young founders in their early 20s that start these companies. But if you look back and look at the actual environment, it's generally people who are like midway through their careers who leave and start a company who has intense kind of understanding of a core problem, right? Because they have worked in the industry or worked on that subject matter for so long, they have like a very deep knowledge that go out and solve something. I mean, these are the average companies, right?
Yeah.
Like, do you agree or?
Yeah, I guess I don't know if there's enough data to, like, I mean, certainly, right? So it's just like when we were growing up, my parents said, oh, you got to be an engineer or you got to be a doctor because, or an accountant. You're guaranteed a job, right? But people that have actually taken a different path have done extremely well, right? So I don't know, certainly this whole concept of a playbook. Okay, so this is how it is. It's been done. The data shows that, and this is how it's supposed to be done. Yeah, maybe that is true, but there are people that can come out with an extremely different way of thinking. So maybe they don't get. If you're going to disrupt an industry, like if you go in an industry and you worked in it, you think the same way as that industry. So some young entrepreneurs can say, "Look, I don't want to even know how this is done, but this is how it should be done." So that's a new model, a new way of thinking. So to your point, yeah, you can make a case on that. Like if you want to bet, like if you want to do an average of people that have been successful, that makes sense. But that doesn't mean that an entrepreneur that starts with no knowledge but thinks differently and has a different passion about and able to innovate and gather information to get to where they want to be, they could be successful as well. And being different can cause that. I mean, you can see that. I mean, whether it's Tesla or how Elon Musk is trying to disrupt the automotive industry. So it's very important for somebody from outside looking in and trying to disrupt it, rather than somebody that worked for a big, large auto firm, and then you got it still. There's a tendency to think the same way.
Yeah.
Right. So, yeah, like I think it's important to encourage entrepreneurship. To take, I think entrepreneurship, not everyone can be an entrepreneur, and it's okay to be not an entrepreneur, right? And I think it requires a certain commitment, certain skill set. Skill set means certain DNA, risk takers and hustling and different DNAs and never giving up. Those skill sets are required. But I think overall, even bigger corporates are looking to hire employees who are entrepreneurial thinking, because they want to be different and they want to innovate within their organization as well.
Mm-hmm. I mean, immigrant background, right? Like, where did the focus come to? Like, I want to go start a company. Did you always have that, or?
Yeah. So like my parents, I was born in Sri Lanka. So my dad, we left like, I guess, early, like 80s. My dad is a teacher, so he went to Nigeria. And actually, when we went to Nigeria, I mean, because of the war, we had to leave Sri Lanka. But when we went to Nigeria, we were in a very remote village. And that was a big shocker for us. I mean, we had tap water in Sri Lanka. Here we had to get water from the well. Oh, wow. And my dad was probably making $300 a month as a teacher. And we are four of us. And my dad himself was entrepreneurial. Like, okay, you know what? I need to supplement my income. And we had a farm. We will actually work in the farm.
Wow.
Small farm. Yeah. He had a chicken and things that we were. So we became entrepreneurial. My mom will sell soft drinks, as to complement. And when my brother and I, we actually went to university in Nigeria. So actually, before coming to UFT, I was in a university in Nigeria. So you can really not support two university students with that. So we've always been, like, my dad has been always been a very hardworking person. Unfortunately, he passed away 2 years ago, but he's always been entrepreneurial. Now, coming to Canada, the same thing. When we came in, I mean, again, supporting, it required us to be very entrepreneurial. My brother and I will actually go down doing fixing plumbing work and doing a little bit of renovations here and there. I wouldn't say we were learning. I mean, we had family and friends that were supporting our work. So we had always have to do something to support financially. So that kind of, we love that part of it. But then having no job and getting into the software field when I graduated also motivated me to be more entrepreneurial. My first company was also an entrepreneurial company. So, so they grew from nothing to almost 200 employees fairly quickly, and I get to see how they were growing, and got excited about what the opportunities are within that company as well. And they actually, I was fortunate enough to live in Europe. I'm taking a bigger role, so I get to learn different aspects of the business. So those are kind of the experiences that have made us to be very entrepreneurial. And yeah, like, just tons of companies we started, many failed. Fortunately, a couple of them were very successful, which kind of led us to be where we are now. And yeah, so I think it's like, we got to be lucky. So we're like,
it's in the entrepreneurial lifeblood, right?
Yeah.
Yeah, I mean, that's one of the testaments of that, right? Like, you just said you're from Jaffna as well.
Yeah.
Right. So I was born in Jaffna as well.
Yeah.
Like, I mean, it's part of that culture too, right? Jaffna people like are known for being entrepreneurial, like being business owners, things like that. And it's kind of, we export that culture out of that region worldwide. Yeah. And it's interesting to hear that you grew up with this kind of mentality, right? Which is very different from most traditional structures where the mom and dad go to work, right? Yeah. They send you to school, try to protect you from the realities of the workplace.
And I will say, I was 11 years when I left Sri Lanka. So I think in Sri Lanka itself, it's always a struggle, right? You have to be in top of your school, getting a really high, all A's to even get into university. So opportunity to really go and get education, and then to get a job, you need to really work hard. So the hard work is already ingrained in many of us, right? And then it's always a competitive environment, so you need to really rise above the rest of those others to really to do well. So yeah, I think that was maybe now a DNA generationally, but I think my dad was our immediate influence on how we end up, all of us. Even my brothers were my partners in some of their businesses that we ran together as well. So that's kind of how we all, four of us ended up being engineers again, you got to be an engineer or one of those. So we ended up going to university, but our passion tend to be different later on.
Yeah. So was engineering like a way, like when you went to engineering, right? Did you think of it as like, okay, this is me getting my permanent job, mom and dad wants me to get this? Or was it, I'm going to use the tool to get the skills I need to build what I want in life?
Yeah, that's an interesting question.
Yeah.
I was not thinking that far.
No, right.
I think it's like, it so happened. I actually would say, I think when I was younger, I said, I want to be a doctor. Nevertheless, I want to be a doctor. And I remember my brother said, hey, I don't think you're good in math. You won't be an engineer. I'm like, all right, forget doctor. I want to be an engineer. So I just became, again, it's something that would probably get me a job, maybe guarantee me a job, and we can pay off all these debts. And that's what. But along the way, I think being an engineer, it taught me a lot of skill sets that till today is very valuable for what we're doing. Mm-hmm. Analytical thinking and logical, and a lot of analysis and things that we do. I think that was a good foundation that we got.
Absolutely, and it's one of the things we already talked about too about entrepreneurs. Like, you don't talk about the foundational knowledge, right? Like this core skill sets or professional kind of knowledge that they gain from a professional designation or a field that they can now translate into higher forms of thinking. Yeah. They can think of and problem solve at a different level because they got this now systemized way of thinking. Yeah. And that's why a lot of entrepreneurs are engineers, because it's a framework of models of thinking and how to like diversify risk and stuff, right? Which is different from like the people in the financial backgrounds or who are raised in that kind of environment, right? So that's pretty interesting. I mean, what about the rest of your family? Any entrepreneurs there? Like,
yeah, so my brothers were part of my 3 years business as well. And,
okay.
And I think, so it was like one of my brother and two of my friends that started. So
Yeah.
they were on, but they were all like, I think the companies they work for got acquired and they work for those companies now. And then my sister works for a company. Like, so it
Awesome.
was three boys and my sister.
Amazing. So let's flip into the entrepreneurial mindset of starting like an investment firm, right? So you said you first started by being York Angel, and being a York Angel and investing into things you believe in, right? Testing the field out there. When and how did you make the step of like, let's create an entity that can do this in mass, right? What was that kind of thinking that came in there?
Yeah, so I mean, for me, fortunately, I think I met my partner Murat, and he had the idea.
Yeah, okay.
So he came up with the idea, guys. This is a great idea, and I'm like, okay, I'm doing this as a hobby, or as not as a hobby, but doing it like not in a formal setup, like meeting entrepreneurs and investing. Let's do this, and to be quite honest, this is a startup for us. I mean, we are 2.5 years old, and it is like a startup. We starting a fund. It's not. It's like a startup with, and then working with so many other startups as well. So, which is an exciting thing. And as entrepreneurs, both of us realize, okay, this is what we should do, because we are running a business. We need to, for us, our customers are our entrepreneurs. So we want to find as many entrepreneurs as possible and really bet on them and grow with them and share the success with them.
Mm-hmm.
And that's kind of what our mindset was, which was good. So to us, that was so it was more of an evolution. So it was automatically and naturally a next step. Okay, I can continue to be an angel investor, but as an angel investor, you tend to write small checks, right? There's not a diversified portfolio approach there.
Mm-hmm.
And then you write like 10 investments. Some of them will send you some reports and updates. Others you can reach out to, but you write a small check, and they're working with like 10 or even 50 other investors as well. And then the interaction you get might get less and less, or maybe nothing, right?
You get pushed aside
Exactly.
over time. Yeah.
But being a fund, we said, okay, now we can write a bigger check. Now we are a form of fund, and we can formalize things. We can formalize the way we source deals. We can formalize the way we do screen the calls. We can formalize our due diligence process and so forth. So I think that gave us the opportunity that it was a natural evolution for us to like start a fund. Now we still get to invest through our fund, but in a more structural manner.
Perfect. So let's talk about like, the mechanics of that, right? Like actually starting a fund, like, so how did you start the process of learning this?
Yeah. So
Right? Were you start just doing things and you're like, okay, cool, I've learned this so far, so this is how you systemize it? Do you go and find mentors or like support structures? Do you go research? Like, what was the process like?
Yeah, a lot of research, and I think we were fortunate. We were kind of LPs and some other funds as well, so we kind of get an idea about how those funds are made. But we tap into a lot of experts that have done it before, seek their advice on how this needs to be set up. It's a long process and it's very tedious, but it's well worth it. I mean, the biggest challenge is fundraising, actually, right? I mean, we were fortunate. We were already angel investors, so a lot of our co-investment partners joined us. So we like the deals that you guys are investing in, because they already like kind of unofficially ask us, hey, tell me which deal is good, and then I'm going to write a check. So between us, I think all three of us, we probably have about 30 or 40 companies we've been angel investors. So others that know us have been like, you know what, tell me a good deal, and they tend to write checks for that. So when we launched a fund, it was very easy. First fund, was we started with a very, very small fund because we wanted to learn how the whole fund structure works and so forth. So we were fortunate to get, I guess, we got probably about 30 investors right away. I mean, within a few weeks. And we were up and running, right? So we've already been investors. We're investing. We had some exits. My partner Murat had an exit before we started the fund, so there was some history and the credibility, and then people that were investing with us trusted us and came along with us, and we go along. I think as most of all of our investors are high net worth accredited investors, and we don't have any institutions as an investor yet, but when we go to the next fund, that will be our biggest challenge, right? How do we attract other larger investors to invest in pre-seed, seed stage fund? Because very early stage fund, we are considered emerging managers, fairly new. So those are, I think we need to show that we are identifying great entrepreneurs, supporting great entrepreneurs. We have a good infrastructure to do so, and then get great return for our LPs. And that's how we plan to be. We're in it for the long run.
Yeah.
We're enjoying it, and so we hope we're making a big difference in some of these entrepreneurs, and we all get to share their success as well.
That's amazing. So you're pretty much in it for the long run now. You're like,
Yeah.
how can we help more? How can we do more of this and
Yeah.
keep going? And how you really do that is finding the right people, sourcing the right type of deals, and getting the right kind of returns. And that being your sales mechanism, right? So you go back and be like, hey, this is what we've done, right? This is what we've done. So keep supporting us. We keep building forward.
Yeah, and I think it's important to we've even the companies we invest, we try to we don't want to go and run the company and take charge of the company, but try and support them as much as possible. So our LPs that are willing to help, they'll come forward and help them as much as possible. We actually have a next level team that where we can bring in resources to, let's say they have a sales strategy or particular challenge they have to address, so where we can actually help them support that. I mean, because we are investors, we provide that as part of our support to our entrepreneurs, and I think that's important, because as the three partners cannot do everything, so we had to really leverage the ecosystem. And there's tons of other mentors and advisors that are willing to help startup just as a way of giving back. We tap into them as well to provide wherever possible. So entrepreneurs come to us and say, when we do this quarterly update calls or meetings with them, and they provide us areas that need help, and we actually take it upon us to go and identify how can we help them, or they're trying to get into a certain type of companies. Does anyone know anyone in the industry, so we can actually connect them with those individuals.
So that's really interesting. One of the things I want to get your thoughts on, right, is that all these funds now recently, they seem to be going for more and more later stage deals, transitioning to more and more later stage companies. And it's like Ray Dalio talked about, like, the long-term versus short-term debt cycle. And just like that, like innovation, like especially investing, seems to have a cycle, right? Like an investment cycle where like there's a period of like high innovation, high growth, where a lot of small companies are coming up and a lot of like early stage funding is available, and it booms. And these companies, as they grow, right, the funds kind of grow with them and become more like cut higher and higher checks, because they can now showcase these being the funds that this is a company that's their success. They get more and more money, and they get pulled more into later stage funding, right? One, to support the companies that they already invested into, and two, because it's safer, to make safer bets. I mean, do you see yourself being pulled along that cycle where you kind of force someone to go for like larger and larger bets to more safer environments?
So our experience as managers, we are entrepreneurs. We've built company from nothing and successfully exiting. So our experience is pre-seed seed.
Yeah.
And that's where we want to stay, and we want to support as much as possible.
Yeah.
Whether growing a company from zero revenue to 1 million ARR to 5 million to 10 million ARR. Certainly there are other funds that may have the experience and is lower risk, but I think the biggest return can be got at when we are at early stage. We get in very early, we were fortunate enough in less than 2 years. One of our companies, HT Base, we invested and got acquired by Juniper Networks in less than 2 years, and we realized about 11x return on that.
Oh, amazing.
So I think there's a lot to be said about supporting the companies very early and having a extremely higher return at an earlier stage. Having said that, at this scale, do we have funds to keep our equity in play? But as a small fund, we realized, okay, this is the only commitment we can make, and once they get to a certain stage, we might use secondaries to exit, or we will go on for the ride if we see that we can get a certain multiple that we are anticipating. Every company we invest, we will make sure we look for companies that we can be 10x in the next 3 to 5 years. So they should actually have a path to become a 10x in value or revenue, right?
So they should have an aggressive growth profile.
Aggressive growth profile.
Yeah.
With that means a number of them will fail.
Yeah.
But the ones that are going to make it, we're going to have a significant return.
Of course, it's one thing to project the hockey stick projections,
Right.
another thing to actually have the acumen to perform them.
Yeah.
And be able to do that. And part of that is leveraging risk by having multiple companies you bet
Yeah.
on, right?
We do that.
Right. That's really interesting because this, I think that really resonates with me because there's such few resources for seed stage funding, especially nowadays. Like Toronto now has become like there's a whole bunch of funds right now, like Series A level, invest $1.1 million and above, and it kind of there's very little companies, very few financial support companies who haven't broached that gap yet to get to the point of Series A.
Yeah,
Right.
for sure. I think there won't be if we don't exist, there won't be Series A companies.
Yeah.
I guess, right? Yeah, I think this is, as I mentioned, this is where what we know well, and we've proven with not just entrepreneurs but as early stage investors, we see the return. Big challenges, but we also have, I think we are building a support system so we can help these companies to increase the chances of them succeeding. So instead of having a number of them fail, what if we can actually help them along so they can also succeed and get to the Series A as well?
Perfect. Do you provide anything else other than financial support? Like obviously, like some kind of mentoring, some kind of support, some kind of consulting work is there. But what are the resources you kind of deploy?
Yeah, so I will give you an example of so our LPs, as I mentioned, I guess 20 plus LPs who are investors who are active in our fund. So they actually will be, for example, we are the former VP of Finance for Alibaba, who's an investor in our fund.
Wow. Yeah.
And he's actually sits on the board of one of our portfolio companies.
Wow.
We have the former CFO of Johnson & Johnson with an investor in our fund. He actually sits on one of our life science tech company as well. And he's actually taken them to J&J for potential pilots and contract and so forth. So I think we leverage our LP network, as I mentioned, and with our next level team, we are forming those more formally, but again, providing this as specific help that entrepreneur needs. I need help in this area. I need help in those areas. So we don't go out and we don't have a program where we mandate them to come through. We would just go out and
They're
say,
available.
"Look, these are all available. Tell us what you need." And we can see that when we meet them on a quarterly basis, or these are the gaps you have. Okay, you know what? We got this profile of folks that we can bring in and we could have a discussion about that.
Right, and that's what you generally hear of too. It's not just the money, but it's a resource base that can be provided, especially through the investors that come in.
Exactly.
And the connections you make through that.
Exactly.
So that's really interesting you mentioned that. So let's dial that back a little bit to the companies you work with, right? Because you talked about relations being such a key component, especially in early stage companies when they don't have a revenue structure, they don't necessarily have any stability, right? You're really betting is on the entrepreneur.
Yeah.
And about building that kind of relationship with understanding the person, tracking them for a while to see how they deal with these kind of situations. One of the biggest issues that venture capital gets into is the idea of creating like a monotone culture, right? Where the people who are in charge of the capital, they invest in people who are similar to, or believe in the same thing as them, right? And they create a culture of like-mindedness. This is the biggest problem Silicon Valley has, why a lot of wealth has left Silicon Valley and invest in other places, and why a lot of talent leaves is the idea of groupthink, right? Because the same kind of people who think and value the same kind of things get invested into and keep sporadically putting the money into, right? And Toronto is different because we're a city full of immigrants and minorities, you being one of them, right? And that diversity kind of aspect. How has that shaped your thinking as an investor?
Yeah,
having
so
that kind of background.
we actually have one of the criteria between Murat and I when we look at a company, something called look from the above, where we disagree the most. So they tend to be probably one of the best companies. I mean, we model this with another VC in the Valley as well, where the best deals are when the partners disagree, because those are the ones that are thinking differently. They're not following the norm. So which is important for us. I mean, there's a number of if you look at our portfolio, certainly some we've made, we made a mistake, or we would think about it. Maybe we should have consulted another investor as well. But in many cases, we were, we are investors where other funds have passed on it. There's one of the company that's got a female founder. She's got great traction. She couldn't raise here in Toronto. We were the first. We put the term sheet in. We're the first to invest in. We referred her to a VC in the Valley, and they wrote a very large check. And now she's up and running, and she's significantly grown her revenue, and then she's on the, I think, pretty much wrapping on the next round as well. Absolutely. So I think we want to think different, just like we want the entrepreneurs to think differently as well. And in some cases, we will co-invest because we can only write a smaller check. So somebody's raising 500,000, our check size is only 100. Yeah. Right? So we want them to raise as quickly as possible. So we will socialize with some of the investors that we know that will focus in that area and have the similar similar philosophy. Also, in areas where there have been a prior investor with that individual company, we want to understand why they invested and how long they've known the investor, the entrepreneur. Because not in all cases, we will get to know the entrepreneur. Many times, maybe entrepreneur goes, okay, it's a great company, great market, great entrepreneur, but they're going to close soon and we really want to get in. So we don't have the luxury of knowing the founder. So we tend to reach out to their previous investor, get to know them as well. Now, there are areas where we really like a company, but we don't know that space that well. So, but we like certain part of that business. We will then reach out to other investors that have invested in that, that have the expertise in that field to get their perspective. Yeah. So I think that's there, but I think me personally, and Murat as well, we actually got burnt. And as an angel investor, we wrote a fairly large check into it as an angel investor, thinking that this very large, VC is investing, not realizing that they have not done deeper dive because it's based on a relationship and they wrote a check and that company is folded, right? So I think, that was a lesson to learn, to say, let's not lead, let's do our own due diligence on our own merits and with our own thesis. It may be different from many, but hey, that's part of how we.
We hear that a lot, like the group thing that happens in investor groups is like you trust other person and there's trust, and then it kind of like spirals where people are like, okay, cool, this guy's in it, right? And like, okay, that makes sense, we'll go for it. And you see that with a lot of companies you raise, because a lot of startups are kind of play that mentality. They know that getting a good name or getting a good cosign is going to spiral their round.
Yeah, right? I think it's true. Like, in as much as, it could create that group of maybe lack of a better word, a cult, right? Where they're together. But I think it does also help, right? So it's because there's so much, like at an early stage, there's maybe so little due diligence you can do, right? So it's good to understand why the other person is doing it, and I think it does help, right? So especially if you know of a certain VC that has been really successful in picking the right winners and had a good track record, it's important to get that feedback, and knowing that that person is in could validate. Sometimes it could be a backfire, because they may have, we've actually backed out of a deal when we know that VC is a corporate VC, right? Maybe it's more of a strategic viewpoint. Maybe that corporate actually acquires that type of technology. So they put a big lead term sheet out. We actually backed out. Okay, maybe their motives are different. So we need to think about when a lead VC has a different motive, and we want to make sure that we are different. Yeah. So we do also check with knowing the other VCs is very helpful, but I think it can help or hurt based on.
So when I first started doing like the entrepreneurial gambit, as a getting involved in the community, I started my first company when I was 17, second company when I came back to school after the first company to do well, right? That was all in isolation. My third company is a tech company that I didn't really understand. I started reaching out to the community to learn from and started getting mentors and going to these pitch competitions, stuff like that. Started seeing all these bubble companies form, right? Founded by people who know these resources out there, and just who has the ability to capture something, capture all this stuff, and just build these facilities to just get the wealth or get the accolades. And some of them was like there were people at the time professionally pitching just to win the pitch competition. They don't actually build the company afterwards. They just take the resource,
Yeah.
right? And I mean, we see less of that now because mostly because can track more. You can track people on LinkedIn, who win, what happened afterwards. You can see kind of holistically, and as more exposure comes, I think that's the light of this. But I think that's a big problem in this industry, right? Is the people who can showcase, put up the front, not necessarily as a fraud, but like as like a bubble, right? Build this bubble around them as like, oh, it's a great product, it's a great thing, right? And get the accolades and the relationships in place and create false entities, right? How do you protect from that,
Right.
right?
I think, like in any industry or ecosystem that's fairly new, maybe initially that may have been an issue. I don't know about it, but I think right now, I think it's a very small community.
Yeah.
It's getting smaller and smaller, especially like all of startup community globally is a small community. Then if you think about North America, then if you think about Toronto, you really can't get away with it.
Yeah.
Right. I mean, or just a phone call away from getting to know that. So I think whether as a VCs, I think we need to be in our best behavior because it's an extremely small community. Entrepreneurs, individuals, advisors, mentors have to. I think it's very, very important to be genuine, to do it, and be ethically, morally, be right. It's so much value in it because this is not a short term. You can come in and flash and dash, and it's never over. You're going to be in it in the ecosystem. Even if you were to move to the US, I think that system is even smaller there. So I think it's an area that I think whoever is trying to do that is thinking about from a short-term perspective, not really from a long-term standpoint, and really can't sustain it. To me, I think right now we will automatically be flagged with so many other ways when we identify companies. And just as recent as 2 weeks ago, we heard a pitch, and then immediately I get a text message in the text message, hey, did you know this? And I'm like, wow, like, in the middle of a pitch, I'm not kidding. In the middle of the pitch, somebody just sent me a text.
That information flows. Like
yeah,
this,
so it's like one of the audience just texts me, hey, did you know this? Right? So again, it's got to be, maybe there are one or two try to do it, but you can't sustain for too long, I think.
That's interesting.
Yeah.
Really interesting. I mean, before we go, let's, Dale, if we can pull up your website, Good News, just so people can have a place to find you at.
Yeah.
What's the best way people can reach out to you?
Yeah, so you go to goodnewsventures.com, and I think there is a contact us, I believe.
Okay.
As an entrepreneur, whether you're starting an idea, whatever you have, always reach out to us. We will actually try to meet you in person. We will meet you. We'll at least schedule a web call, and then if you like it, we actually review it and invite you to meet in person as well. This is so valuable. I think whether we invest or not, we would like to know what you're doing, and then we want to keep track of you, and also try and help you along the way so that when you're ready to invest, we will be there to make the investment.
Perfect.
Yes, that's.
Can we just go up to a few of the companies you guys have worked with? Like, these are really cool companies. So #paid.
Yeah.
I mean, the amazing work they've done. Like, that was a young team. So I was at the Discovery Conference. I was sponsored by UFT to be the UFT's lead and the Discovery Conference run by the OCE.
Yeah.
And #paid was in the booth in front of me.
Yeah.
And these guys were like 20-year-old guys, like super young. They just started. And I remember just talking to them and seeing, wow, these guys are brilliant.
For sure.
Right, like how smart and how educated they were in what they're doing, and how confident they were in what they're providing, and how well they've grown. I mean,
it's awesome. Right? I mean, Murad was an angel investor in #paid, and that's one of our, they're doing really well. Very impressed with the founders. Learn, innovate, change. And they're growing. So
absolutely,
be a great story. Lending Loop is another one.
Yep.
Peer-to-peer lending platform. They actually work with small businesses that are looking for small working capital loan, and they got investors, tens of, I guess thousands of investors. You don't have to be accredited, and you actually their return. You can make money off their interest, right?
That's amazing.
So, which is a great platform based in Toronto as well.
Yeah. Zoom.ai, we know they're trying to come on the podcast too. We've been scheduling
right.
back and forth. Resify is great.
Voice Flow is another one that is. They're actually they're the voice. They actually target developers creating voice applications. So Amazon just invested in them as well.
Oh wow!
So if you're, for example, if you're writing an application on Alexa, you could actually use their tool to create a voice application, maybe a story for your kids.
Yeah.
And they have a drag and drop tool for that. Really smart guys. HTBase is the one that they're in the hyper convergence, moving data from premise to the cloud. They got acquired by Juniper.
That's the company you talked about. Yeah,
last
amazing.
year.
Hockey Stick, I know they're doing some
Yep.
great work. I knew their head of client success and their head of sales.
Yep.
Right. What a great sales team they have. The movement, they're able to move. But again, they're going through another pivot, I believe, right now. So that's really cool. Door. They used to rename themselves, right? What was it before?
Mortgage was the name.
Okay, yeah.
So we've actually known Mohammed through his. He used to be with one of our portfolio companies before that.
Yeah.
Before he started Mortgage, and then renamed as Door. Again, 3 guys, ex-Flip, really like the founders, and again they're supporting mortgage brokers, back office platform for them.
Absolutely. And you guys recently went into Access. Right, the motorized.
Motorized window shades.
Yeah.
So that's someone that we bet a lot on the founder there. We actually have known Trung for like over 2 years.
Trunk's great, yeah.
With just an idea, and
he's been grinding it out. He's almost at every event showcasing.
Yeah,
like he is out there.
Yeah,
really selling
it takes a lot to get to what you do, and he actually is in hardware and B2C, and it's kind of outside of a sweet spot, but we love the founder so much.
So that's exactly what I was going to ask for. A hardware company like this, I mean, this outside your traditional portfolio.
Yeah.
What was the decision-making process there like?
Yeah, he was overwhelmingly amazing founder, and we tracked him for a long period of time, and we seen the progress of what he was doing, and we thought, and then we still very bullish on what he can accomplish from what he's
So again, doubling down on the founder and their hustle and all that. Great. And Cubo, I mean, love Cubo.
Yeah.
Right. So one of our companies we work with is Tap Menu. One of the biggest issues is working with point of sale providers.
Yeah.
They're so black boxed, and there's a few integrators coming out, right? But none as easy to work with as Cubo.
Yeah.
Like we reached out to work with the Cubo, and they reached out back really quickly.
Very young guys. They're a Y company
Oh, yeah?
as well, based in Victoria, BC. What they do is they aggregate all the delivery platforms, so DoorDash and Skip the Dishes and Ritual. And as a restaurant owner, you have to work on all these devices, so they integrate them into one platform. So
Beautiful.
as a restaurant owner, it's easy decision to make, because it creates more efficiency and support. Everything is a lot easier, but the team is an awesome team.
Yeah.
And very young guys, and we very bullish on those guys
Yeah,
as well.
I mean, it's funny because like the conversation has just drifted into, there needs to be an integration. There's too many platforms out there, all this, and boom, these guys have already moved into that market space.
Yeah.
And they're in a perfect safe space right now.
For sure.
But what's beautiful about them is how easy they are to work with. If you are a startup, want to integrate the point of sale systems, they're leveraging their network. I know they have a great partnership program, right? It's a paid program to interface with them. If you are a great software provider, you can work with them too. And it's been great. So yeah, great companies you're definitely on your portfolio with. And Mohan, thank you again, man. It's been an hour.
I know.
Right, we're gonna wrap up. Right, I feel like this conversation could go on for a few more minutes, but we'll wrap up.
Okay.
And hopefully have you back later on to talk more about your next round and
Yeah, I
companies
hope
coming
so. We're still looking to invest in 10 more companies. So there are great
Perfect.
companies.
And what's the check size you write?
So $100 to $200,000. So
Amazing.
the maximum we've done is 500,000.
Yeah.
So our sweet spot is about 100 or 200,000 pre-seed seed stage. We like SaaS companies, enterprise or SMB. We've done some marketplaces as well. We are trying to stay away from hardware and B2C companies, but if there's a hardware company, there's a bigger software component to it as well.
Perfect. Right. And is it debt, equity, mix of both? What do you
No,
do?
all equity.
All equity.
Yeah, so in terms of our term sheets, we are very flexible. It can be a convertible note or pref share, but it's not, so convertible note is a note that will convert when they go in the next round.
Awesome. Perfect.
Okay.
Mohan, good
Thank
news
you.
ventures. Thank you.
Thanks.